Good morning, traders. Sorry for being a couple minutes late. Welcome to the Wednesday webinar. I'm Todd Gordon, founder of Trade Analysis. I've got my team, Terry Long, Alex in the house. What's up, guys?
How you doing?
I'm good. I'm good. Bennett is... oh, Alex, can you throw me on... you got headphones maybe, bud?
Yeah, we
Actually,
lost your input there, Alex.
yeah. Yeah. Oh, hang on one second. Let me just make one little adjustment and then we'll get rolling. We got a good show for you, as always. There we go. Okay, perfect. Alex, let me just make sure. Are you in there, buddy? Can you hear me? Test, test. 1, 2. Lost your audio. Okay. Yeah, work on your microphone issue, Alex. We're gonna need you, man. A lot going on in the crypto world. So, you know, what do you think, Terry? What's your feedback here in the world of gridlock that, you know, looks like
Well, I mean, it's
may or may
post-election
not
day,
happen, but we have to wait, seems like a week or possibly a month to see that we
I'll
maybe
tell
have
you what, I
gridlock.
did not stay up late watching election returns because I was very doubtful there was going to be anything serious happen overnight. And it looks like it. I woke up this morning and then we're still, you know, sitting there with very tight races in both
Yeah.
houses. And so it's not really what I really don't use whatever happens in that political arena to figure out my trade. So, but,
Yeah.
you know, it's noteworthy. It's newsworthy. It's what's happening today.
Yeah, exactly. And, you know, I think that's a good point. You know, I care about politics, obviously, outside of my job, our profession here. But I think I've kind of developed, and I think what you're saying as well is I've developed the ability to separate the two. I have, obviously, everyone has their political biases and leanings, but you have to be able to
Hmm.
separate. But I guess what I'm saying is I care about the political landscape right now quite a bit because it's to the extent that the market cares about it. And I was kind of expecting a little bit of a move, a little bit of a bigger move here following the fact that we're not going to have clarity going forward. And I was thinking the market cares a lot about it, and maybe I gave that too much credit. You know, we'll see as the results start to come through. You know, I guess there's 4 key Senate races. I think the House is probably going to go to the Republicans, but we have some key Senate races, and we'll see. You know, I think was it Arizona or Nevada that you might have to do a recount as far out as December. Which one of those? I was like you, Terry. I didn't stay up late.
Yeah, probably. I think also in Georgia. I think
Oh, in
the
Georgia.
race is too close in Georgia. They have to have 50% of the vote, otherwise there'll have to be a runoff. So, and I
Yeah.
think they're neck and neck right now, and neither one of them have 50%. So,
Yeah.
um, yeah.
Yeah, so it looks like we're going to be looking for. We'll see. CPI is going to be the big one tomorrow. So markets have been trading very sloppily. We'll take you through. I'll give you the indexes top down. You know, I think they've been trading like they're anticipating, obviously, results from the elections as well as CPI data. We're more than half through earnings season. We're still getting earnings reports coming out, and it's been pretty dicey in terms
Hmm.
of how EPS has come out. Energy has really been the main driver here. And we've had a lot of debate, you know, within the trade analysis community. Energy leading, is that a good thing for the market? I mean, are we seeing that true rotation into value, which we've been dealing with for a year? And we're starting to see a reacceleration into that. I know Terry's got a lot for you on the sector front, talking about sectors that are leading, and there's some little green shoots of the old growth trade that I won't let out of the bag here. But Terry will take you through. Alex, I got a lot to talk to you about, man. Is your mic working or what? We need you today. Crypto's going crazy. Dude, you're killing me. Can't hear you, Alex. Work on work on that microphone. Alex, we made him get a new microphone. I'm kind of wishing I didn't do that now.
Well, we had it working in the pre-show, and then something changed.
Let me just see here. Let me just make
Pick,
sure. Audio settings for Alex.
Something on
Yeah.
your end, Alex, I think.
Yeah. Yeah. Just work on it for me, bud, if you can. We need you, man. FX. Crypto's going crazy. Just make sure you are up.
No,
and
Alex
running.
does have a full. No, that's the echo channel.
Alex, did you do something on your end? Because we got a good echo. I would say that it's encouraging. All right, so let me take you through at the top. I'm going to let Alex work on this. So again, markets are very much sort of scraping around the bottom of the support zone here. It's all relative to the June, July lows. There's been a lot of interaction here as we're contemplating a double bottom. Again, some markets like tech and some consumer discretionary have made lower lows relative to June and July. Others have made kind of a double bottom. Others have made a higher low. Crypto, which is still very much correlated to the stock market and specifically tech stocks, took a pretty good leg down yesterday, but same thing, they kind of double bottomed against that June, July low. So where do we go? Let me show you the charts from where I stand here and the way that I'm dealing with the path forward here. We're in, we have a month and a half to go in the year. It's unbelievable. I have cash in the sidelines on the wealth management front, waiting to either deploy on the long side, or if we are going to break through, which I really think it's a 50-50 break or 50-50 guess right now, we might have to get more defensive. There are some names that I'm willing to be short in the market. You look at some sectors that are continuing to underperform. There's some good opportunities on the short side. Coinbase is one, obviously being driven very much by crypto in the FTX Binance deals. So there's certainly some opportunities there. So let's dive into markets as we see them here. I'll take you through our first interpretation. This is the S&P 500 cash. In the $1.5 billion, trillion-dollar question is, what is this coming off of the early 2022 lows? Is it a 5-wave diagonal starting with, 5 waves down, up in B, and then is this the start of something deeper? And as I mentioned on the earlier opening there, all relative to these June, July lows. The S&P tried to get below, but then we came back quite sharply. So the fact is that we have a 5-wave move here coming back to retest those June and July lows. So is this a 5-wave move that is of the same degree as the 5-wave move that is presented from the first part of this year down into those June lows? That's a question on the table. Or, and this is one of the shortcomings of Elliot, or is this wave one of a smaller degree that is of the same degree as this guy right here? Okay, so you can see, I can just decompose this quickly. There's the 5-wave move, sort of a leading diagonal there in 1, up in 2, 3, 4, 5. Okay, so is this wave 1 that is of the same degree as this guy right here? We're going up in 2, this is 2, and we're going to have a significant wave 3 down. Or is it all of the 5-wave move that is of the same degree as this January to June decline? That's the question on the table. This count says it's very simply A, B, same 5-wave move down as we saw in the first half of the year, and this is it. We're moving up. We're coming up against trendline resistance that is sourced from right about here. We're kind of through it, right? We're kind of through it. The action has been encouraging. It's just as we get down to the shorter time frame here, the evidence of an impulsive move off the lows is kind of lacking. Okay, so if this is all of wave 2 and we are heading higher now, we need to see some little bit more energy that would indicate that this is going to be a new MotiveWave on the upside. Okay, so getting off the daily down into, this is a 20-minute. It's interesting. We've been laughing with our members here that this is what we call kind of the funky wave 2. So those of you who have studied your Elliot would know this is called a running flat. So it's down in A, up in B, C to a higher low, which indicates strength in the coming wave 3. It's not really what we got. Okay, if you have a running flat like this, that indicates that wave 3 should be pretty strong, and this is all we got in wave 3. If you do a wave 1 versus 3% change study, it was exactly equal. We didn't even get to the 1618 up there. So that's reason number 1, I'm a little suspect. Okay, and then we go down in wave 2, okay, and now we should be in the early goings of wave 3 if that higher degree A, B, C, simple correction that is all of 2022 that's made so many lives miserable, if that's it, then this guy really needs to get on his horse and start pushing higher. Else,
needs to break that October high.
Say it again.
I said needs to break through that October high for sure.
Hey guys, do you hear me now?
Yeah, Alex, we got you, baby. Well done.
Okay. I just relogged, so everything is fine now. Great.
Yeah. Okay, good. Okay, so that's the bullish interpretation that I find to be suspect right now. If we look at, let me just give you the other situation that we're looking at. This is kind of what I'm calling the Rodney Dangerfield of Elliott wave corrections. It's the triple Lindy. It's the triple correction. If you guys remember Back to School, Terry, I'm sure you'll remember that movie. So this one is going to.
I love that show.
Yeah, wasn't that the best? Remember Sam Kennison as the history teacher?
Oh. I have to go back and rewatch it.
I was in the rice paddies. I'm not even going to try to do my best Sam Kennison. And, I'm sure a lot of people have no idea what I'm talking about. Anyways, so the triple Lindy Back to School Elliott wave correction is WXYX. And then, I think this might become our reality. I'm starting to lean towards this guy right here because of the reasons that I mentioned, the lack of an impulsive quality. Plus, if you think of the macro situation, which we're going to jump into right now, rates are not really backing off. Interest rates continue to be strong. Crude oil continues to be bid. We can have that debate whether that's a good thing or bad thing for the economy. Dollar has backed off, which is good, which is related to rates. But if you look at the macro picture, you look at the uncertain political environment we're in, I have a hard time assigning this to be a new wave 3 up right now. I hope I'm wrong, but I'm starting to think that might be that this might be the path forward. So what we're looking at here again is it's not too dire. Some people could say this is the new 5-wave move down and market's going to crash and blah 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 and all that. But for me, it really looks like an expanding volatility. If you threw up, there's a ATR channel study here, average true range channel. If you threw it up on the weekly or the monthly, what you'll see, and I can do it for you if you're interested, is it starts very narrow. And as this correction this year has expanded and continued, the ATR channel has expanded. Volatility is increasing. And that's to be expected as the market pushes lower. But it's weird because the VIX, the volatility index, has not made really any significant upside gain. It's just the swings are significant. The realized volatility is significant, but the implied volatility, which is measuring at the money premiums for the SPX options, is not really increasing very much. So it's weird. It's a complacent, expanding volatility pattern, and I think that measures up perfectly with the triple Lindy correction. So what that means is we might have one final C wave of Z, and this is again PhD level Elliott wave to have the triple correction. So getting off the daily, here's what the B wave on a 15-minute kind of squished up looks like. So, even in here, it looks fairly corrective. So it's ABC, down an X, another ABC. Remember, I sort of gave you my caution on that. The distance traveled here in wave 3, which was not indicative of a wave 3 that we would expect post-running flat, which is indicative of a lot of underlying strength. So I'm wondering at the heart of this thing, if it's a B wave. And then What makes it even more funky is we don't even really have a 5-wave move off the B wave high. It's down in 1, up in 2, down in 3, 4, and then we have a truncated 5, which means we didn't go to a new low, which is not wrong. It's unusual, so that's fine. And then we move back up in a corrective move that held the 786 retracement. So the way we're approaching it with our traders today is if we stay below the 786 level, right about 3860 to 60 to 67, this count is likely going to emerge victorious. Okay, I'll just give you a quick NASDAQ, and then I'm going to bring in the team here a little bit. Let's focus on this guy right here. So this is the count that says, just like the S&P red that I showed you, this is the interpretation that the lows are in. Okay, so we have 5 waves down in A, up in B, and then a short abbreviated C wave. It's abbreviated in time, okay, because obviously the first A wave took November to June, so it took like, what, call it 8 months. And then this guy lasted mid-August down to mid-October, so obviously a lot shorter. Off the daily, go down to the intraday. Is there any kind of case that could be made for the bullish situation in the NASDAQ? It's not really a great outlook either here. The upside effort in the NASDAQ, 1, 2, 3, 4 overlaps 2. You go on up in 5, the big old ABC down. We held the 786 retracement of this 5-wave move, so that's constructive. But then the sell-off yesterday gave us a pretty good amount of overlap compared to the little correction that we were working yesterday. So we're looking for signs, guys, of 5-wave moves, clear 5-wave moves off the lows, and we're not getting that yet. So it's making me a little bit concerned. There are pockets of strength, as I mentioned. Terry's going to show you some of them, but you look at markets, you look at 10-year yield up at 4.1. You look at 30 at 4.3, reapproaching the highs. Look at the 5-year, right at the highs. The 2-year is right at the highs. The 3-month, which is essentially your federal funds rate, right at the highs. Interest rates, bond yields are not backing off here a little bit. The dollar is, I'm curious to see what Alex thinks about that, but it's starting to be that, you know, if we go sideways, I think the likelihood that this is not a motive impulsive off the lows and this is just a sideways correction buying time ultimately would lead to another push lower. I'm giving a slight probability to that, but again, I'm trying not to have a huge opinion in here because I think the market is really trying to decide what the path forward is, and it's not our job to try to tell the market what to do or how to vote. Right, we have to be passengers, we have to be observers, and when she's ready to move, we'll take her cue. Guys, what do you think?
Yeah, I find it interesting that that we didn't even mention the Fed raising the interest rate 75 basis points in the entire conversation. How fast that news gets absorbed by the market. And then the market's moved on, you know, to the.
But
next
we knew
topic.
that. But that's the whole point with the federal funds. Like, all right, so we're going to go to 4.5, 4.75 in the terminal. Like, we've known that. That's old news, right? Like, you know, I'm not pushing back on you, but we've known that, and the market's known that. I think it's just clarity. Once the Fed can give us a little bit of vision of that, they're not going to push us right off a recessionary cliff. We're probably already in recession, but by their actions trying to combat and throw everything they can at inflation, are they going to push us off the recessionary cliff? And I think once the market gets some clarity from then is when we can start to mount an attack.
Yeah, I agree with you with this cautionary approach because we basically does not have a visibility which gives us to go on either side currently.
Yep.
So as the Fed is concerned, I think that CPI will be big tomorrow. Anything around 7.9 or below will make a frenzy out of repositioning in the markets because the Fed already announced that it's going to increase increments. And of course, we announced that a couple of weeks back because that's kind of a logical thing as you approach the terminal rate.
Yep.
So there is a couple of things there which kind of inclines that they might actually start to slowly pivot into smaller increments and finally at some point stop if inflation numbers or CPI starts to move lower. So I
Right.
think that's a very pretty simple picture what they're looking. So we
Yep.
have the latest NFP numbers. So the commodities are still trading lower, except some pockets of it, which didn't make any significant move on the upside. And that has been going for a couple of months. So I think CPI might surprise us tomorrow.
Interesting. Interesting. Yeah. That any kind of clarity and anything that would give the Fed a little pause, whatever a Fed pivot is now, I think, could start to give that first red count some credit and maybe start to mount an attack. But let's take a look at it on a sector rotation. I'm going to bring Terry in here, but I think the main thing that is really driving me is just this rotation that continues to happen. If we look at growth value, I mean, I think it really comes down to a lot of this. This is a long-term chart, and I've shown this one before of iShares value to growth. Value has been underperforming since 2007. You can connect the high here in 2016, and the trend line extends right to where we are right now. So you're talking from 22 to 08. Right? So you have a pretty significant long-term downtrend value growth ratio that is being threatened. And we'll see what happens, but I know a lot of market participants are watching this relationship. So, I was listening to CNBC this morning, and Becky brought up a good point. She was saying that with all the stuff and the fallout that's happening in Silicon Valley and Facebook laying off 11,000 workers, I think they had 86, now they have 75, call it. There's a lot of layoffs happening and there's a lot of talent going out there. You wonder if some other industries, like industrials, like materials, maybe even energy. I think energy was set to rally if there was a little bit more of a defined Republican progress in Congress, but you wonder if some of these talented people are going to wind up in other industries and sort of drive them forward. So it could sort of give life to this pending development, which is fine. It's going to continue to be a stock picker's market. If value is going to push higher to get any kind of return, you really need to be watching sector rotation, and there's a lot more value stocks out of healthcare, financials, energy, materials, and industrials than there are the handful of stocks that were driving the tech rally. FANG, couple communications, throw Netflix in there, throw Facebook. Well, a lot of those guys are in big trouble. So it's going to turn into, if this thing really does break and we continue to see those sectors that I just mentioned outperform, really got to go to work getting yourself organized, knowing which sectors and industries and stocks are driving this market, because it's not going to be the big cap FANG names. Any follow-up there, Ter? Yep, I can hear you.
Okay, just looks like my video image is frozen there, but
let me see if I can refresh you. Yeah, you're.
That's okay. They can look at my ugly mug and whatever. But yeah, I mean, that's very interesting that we're back to that trend line that you demonstrated. We're not advocating a return to of tech in the growth right now. But I mean, there's certainly sector rotation occurring, and we want to show you where that's happening.
Yeah,
and
let's
be able to take advantage of those moves.
Let's do it. I'm going to send it over to you. I'll take the camera off. Yeah, you're frozen up, but you are going to be live right now. And have at it.
All right. Hello, traders and investors. I'm Terry Long at TradingAnalysis.com here with your weekly sector focus post-election day. Now, Last week, like I said, we didn't talk much about the Fed, but if you were watching intraday price action just as the Fed announced that 75 basis point rate hike, there was some very peculiar intraday price action. At first, as soon as they announced it, the market actually rallied. But as then the press conference began and Powell started off with more hawkish tones, the indexes actually peeled back those gains and turned them into steep losses. Now, Friday's price action recovered a small bit, with the S&P closing at about 3770 for the week, down 3.35%. The index closed below September's lows. This is September's lows. We actually closed Thursday and Friday there below those values. The index was hit hard, down 5.97%. Now, in terms of sector performance last week, only 3 of the 11 sectors finished last week in positive territory. The energy sector rose 2.43%, material sector up about 0.9%, and the industrial sector rose 0.48%. Now, all other sectors closed in the red, with the communications and the technology sectors. There's your growth right there, taking the steepest declines, down 6.75 and 6.63% respectively. Consumer discretionary also shed 5.15%, while staples, real estate, and healthcare were more resilient, though they did decline. They still outperformed the benchmark S&P, as did the financials and the utility sectors. Now, if we fast forward to where we are this week, we can see midterm election results are topping the headlines. It's not really affecting the market, like Todd said. We really, would have expected something more. Will a gridlock Congress be what investors are looking for to end this bear market and mark the beginning of a new bull market? Only time will tell. Now, for the first 2 trading days of this week, the S&P has gained 1.53%, and the NDX is up 1.86%. Now, sector leadership in these first 2 days is actually coming from the technology sector, which is up about 1.51% here, including pre-market activity this morning. We have industrials and materials sectors also outperforming the S&P so far, with a 1.38, 1.08% gains here. Now, energy stocks are underperforming again today, and showing a 1.3% decline, as consumer discretionary is also on the downside. Now, I want to take you over here to the semiconductors. Semiconductors actually seem to be taking the lead to the upside this week, with 2.93% gains led by Global Foundries, which before pre-market action, yesterday's close was up 12% in 2 days of trading. You can see they peeled back a little bit this morning. Inside the weekly RRG here for the semiconductor subgroup, we have what looks to be new northerly hooks forming, which is a first step indicating a possible return of momentum and relative strength to semis. Now, yes, currently all the semis are down here in lagging, underperforming condition. And as I animate this, you can see the path that they have taken. But notice that we are starting to get several of these making nice turns. Now, again, you heard it here first. It's a very early indication of something brewing, and this is the clear definition of sector rotation, when we see major shifts in the direction of momentum, and then eventually we'll see relative strength. Here with applied material, we already have a northeasterly heading, which is gaining relative strength. Lam Research has re-accelerated momentum, needs to shift back to the east a little bit. So we'll watch for these semis that are making these rotations. Now, I mentioned Global Foundries. Global Foundries, ON Semiconductor, and even Cadence are still in the group of semis that are outperforming the S&P. Anything to the right of this vertical line has been outperforming. I will admit that cadence is exhibiting a weakening factor right now and possibly looks to exit this lead. But again, if we get these hook formations collectively across the group, it's very likely a hook will form in cadence, which then could push it and propel it right back up into the lead. So that's what we're showing and sharing with our clients. I'm going to show you my price chart here of the semis, and I'm going to say, I wrote this little comment here, when we broke through this medium-term downtrend line right here to the upside, I've got Heikin-Ashi candles, and I've got 2 days there of green Heikin-Ashi trends to the upside, and now we've got a little red consolidation. I mentioned the other day to our clients, 1 day does not a trend make, but it did close above that downtrend channel that has possibly turned into a new support channel. So we'll look for consolidation. You'll also notice we're sitting right here with the SMH at the 50-day moving average. The other indicator I like to track for confirmation is this bullish MACD, right? So on the daily chart, the moving average convergence divergence is still open with the oscillator above the average. The histogram is showing you're collectively continuing to make gains. This is a very positive structure. Now, we'll have to combine all that with Elliott wave features. Again, I'd like to see it break back above these October highs, because certainly, as we showed earlier, this still could just be 3 waves up and then we collapse one more time. But there is some constructive things out there for you. So that's all I've got. I'll send it back to you, Todd.
Yeah, that's going to be interesting. NASDAQ coming out of the gate here is not looking very good. Market's down. I hear you on the point. The semi-strength has been pretty impressive. Is it going to be enough to keep this tech sector afloat? NASDAQ down 1% here in the open. And one of the things I was going to show up here is correlation of crypto and Bitcoin. It's real, or even more so Ethereum. So I want to set Alex up on this and see what your interpretation is before I bring you in on that, Alex.
Hey, Todd, do you hear me?
Yeah, I
lost
hear
Todd.
you.
Yeah, I lost Todd.
I hear Alex.
Yeah, I don't hear Todd at all.
Can you hear me, Alex?
Yeah, I can. I can hear you, but I lost
Okay,
Todd.
well, we can't hear Todd. So,
Okay, got it.
this
Yep.
there
I'm
we
back.
go.
I got you. Okay.
Okay.
So,
Okay.
oh, I see what happened. Got it. Okay. Yep, got it. I see what's up. So back to what I was saying there, kind of setting Alex up. The correlation between crypto and the Nasdaq continues to be real, and I think the news yesterday with FTX and Binance was interesting. And crypto was down 15%, but if you put it in context of what happened, on my opening sort of dialogue there, we're all kind of judging the relative strength and weakness of the market to this June-July low. The Nasdaq is below it. The crypto market, Ethereum and Bitcoin, even with yesterday's sharp 15% drop, is still above that low, which I find interesting. So one, the correlation is still there. Two, even with yesterday's whacking that crypto got, it's still above those lows. And I would also say the correlation is still very much there. So even though it was a weakness yesterday, if we don't follow through an Ethereum or Bitcoin, could that actually turn to be sort of an advocate for the market? So I just want to throw that to Alex and tell me what you're thinking, man.
Yeah, I don't think this situation is still cleared on in regards what's going to happen with this FTX situation. So just to dive into it a little bit. So the Sam Backman, the guy which made billions in arbitrage in early crypto markets, actually founded two companies. So one was Alameda Research, which was a kind of a hedge fund company dealing in arbitrage and trading cryptos. And the other one was FTX, which was a basically respected crypto trading platform.
Gotcha.
So FTX was a big proponent of regulations, was very fond of and regarded as the high end of the crypto service. And of course, Sam Backman accumulated over kind of a 16 billion wealth over the last couple of years. But Alameda Research, which was basically a trading company, has pledged some of the FTX token, which was the token of the FTX platform, and actually they pledged it to some derivatives. And when the price of the FTX token fell lower, the margin call started to ring a bell and actually collapsed. So it's the same old story. Actually, the Binance jumped in and they offered a letter of intent with a side note they can jump out of the deal anytime they see something is wrong.
Okay.
So it's still under the review. So they will need a week or two to review the balance sheets of Alameda and the FTX, but actually price went down 76% from highs. And just in the last couple of days, it went down like from 22 to 4, like, I don't know, 70% again. So overall price is 70%, 76% down. And these collaterals, which was placed by the other company, Alameda, by pledging the FTX coin on a certain value for a certain trades, actually collapsed. So net value of Sam Backman dropped from 16 billion to 1 billion just in a couple of days.
Yeah, they said it was one of the most spectacular collapse of a billionaire
Yeah,
CEO ever.
yeah, yeah.
Terry, for your camera, why don't you try to refresh the vMix window and maybe it'll refresh your camera. Alex, the question I had for you was: is there other knock-on effects with?
There we
Why
go.
was like? There you go. Yeah, just refresh the page. Like Solana. Solana was down like 20 something percent. Is there any
Yeah,
correlation
yeah.
with
So,
that? Like, what was going
yeah,
on with that?
Solana was actually a competitor network, and actually the SAM was backing up Solana with its own interference in it as an investor.
Okay.
So that's why the Solana is linked with all of that, and also Serum, which was one of the DeFi coins issued and supported by FTX, was also collapsing yesterday. So everything which was linked to these affairs and these two companies and their balance sheets actually went down significantly, and the FTX token was the biggest loser. So what is going on now? As we hear, the withdrawals are frozen, so you cannot get out your money out of the FTX. And the situation is under review. Will the Binance jump in and buy out a relatively large competitor and actually have with Coinbase a pretty large monopoly? Because since the breakdown of the Celsius, which was a similar story, so one by one, we are actually left with only two relevant, like Coinbase and Binance, and a couple of smaller ones which are scattered around the world. But the major players now, if the FTX is bought by Binance, will be actually Coinbase and Binance, only left alive in this kind of a vulture fight for the crypto market. So there is a lot of shady things, in my opinion, beside this. There is a lot of inside competitor fights. I mean, it's a little bit suspicious to me if you know weak points as it was in Luna. Basically, the collateral price uh, dropped down and actually wiped out everything. Somebody has to short that in a pretty large amount to evoke that. So I'm kind of waiting to this picture to clear out to know really the reasons what happens. But
Okay.
this is kind of the framework of the story.
Got it. Okay. Well, thanks for that. talk to us, share your screen on Zoom, Alex. Alex, you just came out of, show us what's going on in the crypto market. You just had a good trade in Ethereum. You were long, you managed it well. You prepared to talk about that, or what direction do you want to go?
Yeah, sure. I would like to just go quickly to the macro templates we do here. As usual, if you agree, and then I will switch to cryptos if you like, if you agree.
Yeah,
Okay.
yep, sounds
Yeah.
good.
Okay. Okay.
Your show right now, dude.
Sure. Okay, so let's just review. As we said, the increments of the Fed rates might decrease in the future. We already discussed about that. CPI tomorrow will be pretty important. So US 10-year yield, according to this chart, we are very close around this 1618 projection from the wave 1 and 2 for the target of the wave 3. So that's why I think the CPI, and because of many commodities that been lower for a couple of months, CPI is a lagging data. So that's why I think we're going to see a lower print and potentially this rate moving lower in some type of wave 4 and wave 5. So we are in the zone when I think around February, March, we're going to descend into a lower print, and the 5-wave move initial from this beginning will be actually done. And the same thing we are seeing also in the European markets. ECB raised interest rates. We are at 2% now. Futures are pricing in to be at 3% around March, which kind of also agrees with the small pause and around 3% in this German 10-year bond. So basically the same picture, 5-wave move up, and then we're going to have, I think, a year or two a pause in the rates moving lower. I also ascribe that to a possibility that the Ukraine-Russia conflict, as it doesn't look now, maybe will come to some senses around beginning of spring next year. I'm following that scene also pretty intensely, and every day I'm looking for updates, what's going on there. Dollar index is still in some type of a ending diagonal or in triangle, so I do expect this to match the chart on rates. So I do expect this correction to take some time in dollar index, either in descending diagonal or in triangle, and I expect one more pop on the upside. Because if we go on a smaller time frame, we don't see actually any impulsive price action, which will give us a real kind of a reversal signature here. So we need to watch this for the dollar reversal, but I still think this is not the time. This does not look so impulsive on the downside. We can squeeze out some type of an expanding diagonal, but it still doesn't match any rules designated for that. So I'm waiting here, but reluctancy of price to continue lower sharply and 3 waves before it, to me, always signals a possible sideways consolidation before one more move on the upside. But I'm not thinking the dollar is going to go particularly far. I'm looking for 0.92, 0.93 on euro dollar, which will match dollar index around 116, 117 before we continue to move lower. So I do see a 5-wave move up completes in dollar. So we all know what will happen potentially afterwards, so bigger or a smaller correction, which goes down hand in hand with the rates also making a pause, which is also going hand in hand with the price of a dollar. So this is, I think, a very big probability around February, March. So pay attention to that. Commodities are still kind of in a very sideways. This is a Thomson Reuters commodity index. I do expect commodities to kind of spend some time in a sideways and then go a little bit more lower, especially around April, March. So a couple of timings for this, let's say March, April next year. So I see that repeating over and over through charts. Also oil, I do see this as a potential X-wave. This also is planned to kind of make a low around February, March, April. So also the same timing here as well. Net gas, I think still in a 4th wave. We're going to see one more push on the upside. This is the Henry Hub scene. And then if we look a couple of commodities, soybean is also in a very corrective pullback, so I expect lower prices. So overall, the theme is actually that the Fed is going to slow down. I think CPI tomorrow will be very important. The rate signals a little bit more ups and down, and then a sharper reversal in 2023. And most of these charts actually, from technical perspective, are showing the same picture. So I'm following the same path that I have been following for the last couple of months, and for now it's kind of working well. So let me show you the FTX token. So actually 22 was a pretty drastic level where we broke 22, we went straight down to 4. So this is my wave count. So if we don't hold this 3.54 and 2.70, which I have 1618 projection for this ABC on the downside, then most likely we will go to 0. That's all. What depends what will happen with merge with Binance or not. But as you can see, from the top we are down almost 77% currently. So that has been a pretty drastic ride on the downside. But the 22 was a level which was mentioned by Alameda a couple of weeks ago, that everybody was kind of putting the word that everything will be bought at that level. So obviously the 22 level was the level they tried to defend because of these high exposures. And actually when the 22 level broke down, the hell broke in all of the crypto markets, and look actually what happened. So the total crypto market cap is still in some type, in my opinion, as a Bitcoin in some type of a wave 4. This can also morph into some type of a surprise flat on the upside if you see the news from Binance actually completing deal with the FTX. So this is still not, in my opinion, something which I still gonna continue to see the move to the downside. So what we have also can look here is some type of an ending diagonal as well. So I'm still not so much afraid in a sense because we stopped, we are holding this support. And on the Bitcoin chart, I'm still looking in the same manner. So I'm still going to look for potential supports, either a flat or some type of a triangle here, which I'm going to show you now. So this is still not a major warning for me. Yeah, we had some potential still to be in a triangle. P wave in a contracting triangle can go below these lows. But in general, Bitcoin has posted the new low, Ethereum isn't, which actually underlies the strength of Ether, which is also showed on the Ether Bitcoin chart, and we are tracking that with our members extensively. So for me, this is still just a three-way move. It opens a door for an ending diagonal or some type of a flat and then a final push down. I'm much more worried for the bullish wave count if we actually see in a couple of months of wave count validation. If we see the wave count validation, we're going to do a 3 waves pullback, and then we're going to collapse further. So I'm pretty much closely watching this, what's going on. We had a trade on Ether, which actually was trading for this smaller portion of this wave 5 on the upside. If we go on a smaller time frame, let me just erase that. Our stops was at break even because some of the members which are in leverage trades already went out of that. So our entry was here, but as you can see, luckily we do control very much a risk in trading analysis on every trade. So this was on a break-even trade. A couple of guys went out on a high leverage trades. It was a tier 1, very small exposure, so we were stopped out at break-even, and you see what the collapse it has been. So on Ether chart, to your point, I'm still looking this as a wave 1 with the WXY, so a little bit more weeks. I'm going back and forth with this. I'm not 100% on this for a potential reversal, but I'm still optimistic in a sense of February, March, reversal in rates and asset classes going higher with your chart on the S&P and NASDAQ. So I tend to agree with that, but I do time a little bit more downside. My S&P chart differs just a bit So I do see this as an ABC, a little bit more less complex correction. You can put a complex one as well, but I do also see a potential around February, March to go to your target on a lower level for now, as long as we don't see a higher break of this channel and a 5 waves up, which will clarify the air for the further upside. So I'm still cautious as you are, Todd.
Yeah, but I want to call it the triple Lindy, Alex. So we're going with the triple correction, but like the implications are the same, and that actually matches up with what you were saying on Bitcoin, if or at Ethereum, if we're in some kind of triangle, actually both. If we're in some kind of triangle on the downtrend, then we have one more push down, and then that would coincide with what you're showing here, which
We can't hear you, Todd.
Yeah.
Sorry, we couldn't hear you when you switch over there, Todd.
Oh, got it. Yeah, right.
But
I'll have this set. Bet it usually runs this. But what I was saying is the implications are the same. For one more push down and Bitcoin and Ethereum as well as the market. And you got to think, too, if we do go and break those June, July lows, as we mentioned, then go and attack the October lows. And, of course, in different markets, they're in different levels. But the sentiment is going to be horrible if we break to new lows. Like, horrible. And then again, like, what earnings are already pretty bad. We're getting the revisions that we expected. We know where the Fed's going. What? Are we going to have a continued compression in valuations? Like, do we need to go further? Some tech stocks have gotten hammered, and the valuation is much more reasonable. Tech has been getting wrecked. I just wonder if the sentiment is going to be horrible if we break a new low, so much to the point that, okay, now as you're showing, what are you showing there in the S&P? 3,200. I have different hedges on with clients in the wealth management to get down to protect against that kind of 3,500 to 3,200. You're paying 4 or 5%, whatever, to capture that downside and protect against it. And I feel like sentiment would be so bad that might be where the market starts to carve out a capitulatory low, which I don't know if that's a word, but it is now.
Yeah, but I mean, as you know, I try to filter this out with the different macro charts, as you basically taught me a long time ago. So that's a pretty good filter. When you time out and you can see where this is going, all of these macro charts are kind of a sets up for the either in rates or different commodities in dollar index, a kind of a January, February, March timeframe in 2023 for a major reversal. You can kind of assemble these puzzles and kind of have the same feeling as you say, because this capitulation will be probably the worst sentiment, and that's the time when the markets usually turns other direction. And I think CPI tomorrow will be defining, if we inch even lower, an inch below 7.9, that will be a very good sign also for that scenario. So
yeah, we could really use a 7 handle for sure. Good stuff. Just a couple closing thoughts that I wanted to throw at you guys. A couple key stocks that we're watching. I am going to, as I said, with clients, members on the research side, clients on the wealth management side. On the member side, we're going to go into the member webinar here. A few things we're going to be looking at. As we just talked about, it's a very crypto-driven market. Coinbase, the chart looks horrible, and we've had some discussions with members about, I put a video up in our Discord channel for members about the idea of putting an Elliott Wave count on a new stock. Traditionally, Elliott Wave is really built on measuring the indexes, our productive output, how we're interacting as an economy, a domestic economy, now we're international, and the better we're transacting, the better we're getting along, and the more our output, the better our stock market does, and Elliott Wave is meant to measure that. So really it's meant to measure long-term human progress as measured by our scorecard, which is the stock market. So it comes into, there's a good debate I think we all could have about putting an Elliott Wave count on a brand new issue, like Coinbase, or a stock that's only been out for a short period of time. So it's hard to count this if you're using the rules of Elliott And I haven't seen anyone who's, you know, proclaimed expert, who's interpreted Arnon Elliott's work to say, here's the right way to do it. So discussion for another time. I just wanted to plant that seed with you. But from my point of view, Coinbase actually counts better as an ABC down, X-Wave connector. We're doing another A, B, C. You know, we have the lows right here at about 45. I think there is downside support here into the 30s. I was on CNBC the day this thing IPO'd, and I've seen this before. I've been through it with Alex in the foreign exchange world when the FX market was really big in the global financial crisis. You know, it's a very much a commodity business that squeezes bid-ask spreads, which is their main profit source. You know, I know a lot of them are trying to go into NFTs, and that market has gotten destroyed. So I was not bullish on coin, and every YouTuber out there who's, you know, trying to jump on every news story was saying, oh, so bullish on Coinbase, and everyone was buying it, and it's getting crushed. So Coinbase is interesting. I'm going to be looking to potentially take us through these lows and following Alex's charts of potentially one more move down. I think crypto could give us a push there on Coinbase. Do some option structures to get down into that fib support. Another thing I want to put in front of you was Tesla. A lot of news. Elon sold another 3-4 billion of Tesla shares. Tesla's actually up today. Meta is up today, and Global Foundries and Tilray.
Okay.
What's that, Terry?
Oh, it's time to time for our members webinar.
Member
to start.
webinar.
Let's just invite the viewers to subscribe, and we'll continue this discussion.
All right, God, I just got cut off by Terry. Tesla. Let me just throw this one out, and then we'll get in for the members. Big old 3-wave WX. And then an ABC down. There is some real key support down here from a channel, from a corrective point of view, and from a fib clustering point of view in Tesla. If you can't hold that 180 mark, that is going to be problematic. So watch that one. Guys, be sure to throw a thumbs up on there. We'll have it, you know, I haven't run one of these live streams in you know, more than once or twice the last couple of years. So we'll tighten it up in the audio. Throw a thumbs up on there. Check us out at tradeanalysis.com. We're heading to the members webinar. Guys, thanks so much.
See you guys.
All right. See you guys.